Market set to struggle a bit here at the open after Meta reports disappointing earnings. What does that mean for the market and the rest of this week? That's coming up on 3 Minutes on Markets and Money. Last night after the bell, Meta reported earnings. Earnings and revenue actually okay. Daily users and monthly average users actually okay. What was disappointing and what disappointed investors was a lack of attention to cost cutting as Mark Zuckerberg went all in on the metaverse, and that really kind of disappointed investors. That stock's going to be down about 20% this morning. A very big decline, of course, for stock that was already down 60-70% for the year. So again, lots of pressure on that company. Again, with a stock that's trading basically at 8 times earnings, you have to start asking where is the value in this company. But that's going to weigh on the market this morning. Now, yesterday, markets did also struggle a bit because of Google and Microsoft's earnings. Again, Meta's earnings today are going to continue to weigh on the market's movements because it's such a large component of the S&P 500 index. Markets are struggling right now to try to get above that 50-day moving average. Tonight after the bell, of course, we have Apple and Amazon reporting. Some good news there from either one of those companies could help boost the markets higher, but we just haven't been able to get that from the big mega cap stocks. The generals really being under a lot of pressure here, particularly over the last month, as sellers are kind of exhausted out of selling everything else, have now come after the generals, and that's potentially limiting this upside advance of the markets. Again, as we've talked about before, we're still on a MACD buy signal right now, which is supporting this rally in the markets, but we're kind of slowly eating up that buy signal. We're overbought on a short-term basis in terms of relative strength. That suggests we could see a bit of a pullback here in the markets, but importantly, what markets need to do is hold that 3,800 level that we talked about yesterday. Doing that successfully so far, need to continue to do that today. Markets need to hold that level and then, of course, rally from there above that 50-day moving average. We make that move. That gets us up to 4,100 by the end of the year. Now, moving into November, we will get a bit of a reprieve from corporate earnings, but we're going to be talking about the Fed, midterm elections, and the outcome of all those things. So again, there's still a lot of news in the headlines right now that's going to be weighing on stock prices here, at least short term. But the trend is higher at the moment. So use this rally, as we talked about before, reduce some risk, raise some capital. And again, as we start to move higher here over the next couple of months, that'll continue to be the advice. As we move into next year, of course, that's where we'll start to deal with potentially recessionary impacts in the economy as well, which could further reduce earnings and corporate profit margins. So again, we're not out of the woods just yet in terms of this bear market, but we'll talk more about that next time on 3 Minutes on Markets and Money.